Hi there, traders. This is Brad Gilbert with the weekly kickoff. It's Monday, the 4th of March. All right, we're sort of screaming through the year already. Now, this week, we've got a big week, right? First week of the month, there's always a couple of central bank meetings. We've got the ECB, Bank of Canada, and it's going to have a little bit more importance because coming back to last Friday's data, okay, if you didn't see these numbers, the ISM manufacturing numbers were weaker. The prices paid was weaker. Construction spending was weaker. And the University of Michigan sentiment numbers was also much weaker, right? So this sort of comes back to my gut feeling was in January, the US numbers were lifted due to the sort of holiday season and everything else, right? Now we're starting to see a big retraction here in across the board. So what that does for us, it creates opportunities. It creates tension in the market and it gives the market a specific drive, right? It's like, okay, we're sort of looking at a weak dollar. What are we going to do from here? So you're just looking at Friday's moves. You've got, the euro a little bit up, the dollar just drifting lower, dollar Swiss just down a touch. I mean, the dollar was off against most things. Now, not dramatically, but that's where this week's data comes in. If this week's data matches up with last Friday's numbers, well, then we are going to start to see, a shift in the dollar sentiment from sort of being strong, where they've been rolling back or pushing back these Fed interest rate cuts, sort of back towards May or something like that. They might come forward very quickly and we could see dollar weakness here across the board. So I'm just trying to get my right calendar up. Now, let's just have a look at this week, okay? Because you're looking at, where are the key opportunities? Now, there's a bunch of numbers here where we're going to get second tier, third tier numbers start to impact, right? The Aussie economy for starters, we've got the building permits numbers. Now, the previous number was off the map, right? Minus 9.5%. They are looking for a little bit of a bounce here in that number. If it's another shocker, I tell you what, this is going to really send alarm bells to the RBA. The Aussie's already trading weak. It fits that weak sort of picture, right? But so that's just what I'm talking about as far as an example of sort of second tier numbers that we usually probably wouldn't even really look at that could start to come into play. Now, we do have the Tuesday, the ISM services number coming out after the ISM manufacturing numbers. This will be important, right? If this is also very weak, once again, we're going to see dollar weakness sort of filter across the board there. Factory orders used to be, go back to the 90s. That was always a sort of well-respected number as well. But if you scroll down through the calendar, and I'm using trading economics, you start to see a bunch of red as we come into Wednesday, right, around these key events. And that's because we do have obviously some key events coming up. Bank of Canada and the Ivy PMI numbers, no change expected. So it's going to be down to what they're talking about. That makes it a little bit harder, right, because we can sort of guess what they're going to say based on the Canadian numbers that we saw in the last couple of weeks, but you really need probably the press conference to really iron out what's going on, right? So it can be a little bit awkward when we don't know. When there's no interest rate change, these events are difficult, right? Because it all comes down to the various, their own sentiment. We've got Fed Chairman Powell speaking. I think it's at the House Financial Committee, right? Now, the first part of his speech, it's a semi-annual thing, right? So he will be giving his spiel and then the committee gets to ask him questions. And those questions obviously aren't rehearsed. That's where we might see something there. But you can imagine he's just going to stick to his usual mantra around why they're doing things and what they've done. We'll see how that plays out. The ECB interest rate decision, right? Now, this is another key event. Not ready to start changing rates yet, but Christine Lagarde may give us some idea about what they're thinking with regards interest rates or the economy, all these sorts of things, right? This is going to be important, but also more so for what's coming out Friday. We've got some more data, Euro data. So after you've got the ECB and they tell you exactly, what the plan is, that's the best time to get the inflation numbers, employment numbers, because they've just told you what we're going to do should things weaken, etc. So you've also got the second part of Powell there on Thursday, right? And if I just scroll down, so I mean, obviously the ECB and the Fed chairman speaking, on the same day is it's like a big thing, right? They're the two big dogs in the market. And here's this euro data I was talking about, right? So we get the ECB the day before. The next day we get some employment numbers, GDP growth. That'll tell us a bit more about what could happen in future, and that's when you get a nice clean move. Now we've got Canadian employment numbers. The employment numbers out of Canada also more meaning because we've got the Bank of Canada interest rate decision or the meeting this week, right? So once again, the same as the ECB, you see what they say on Wednesday, and then you come back and go, okay, well, how does the employment figures fit in with their mantra or their, the general spiel? And that's where we can get a nice, easy trade there as well. But of course, every second month, it's always like this. You get the US and Canadian employment numbers coming out at the same time. It's a bit of a dog's breakfast. But non-farm payrolls, okay, once again, on the back of the what Fed Chairman Powell is going to be testifying in his speech to the House Finance Committee. You're going to be looking at that. We've got the backdrop of last week numbers giving us a negative sentiment start on the dollar. I think equities should be, rattling from this point. We might see a risk on profile start the week, but these are the key things, right? It's a big week. Then you've always got China throwing their inflation numbers out on a Saturday, right? So that doesn't make sense. All right, so big week coming up. There's a lot of key components. What we're really looking for on a technical perspective, if I just get my pen back up, is, right, have a look at what's going on here, right? If I just scroll back out of the dollar there for a bit, right, it has been the dollar index, was going up there through sort of December, January, starting to drift sideways. We're at the stage where we are looking for direction, right? And that's what we're looking for. So dollar index, we've got a great technical level on the downside. Should we get weaker numbers or a shift in sentiment from the Fed, from Powell? And obviously on the top side as well. But the top side, it's like the market knows there's dollar weakness coming, and they just don't want to sort of test the waters. Now, the ECB, Bank of Canada are coming up. Now, once again, if I just wind in the data here, you look at the euro. Okay, we've got this high up here in December, late December. We've got the low here, sort of around the 15th of Feb. It was tracking lower. It's now just came off the lows a touch, and it's drifting sideways. Like, the euro is desperate for some direction, right? If anything, I'll be just tuning up my support trend line. It's not a great support trend line, but it's the only one we've got. And you could be sort of tying in here a resistance trend line on the top to try and give us some sort of bearing of when's the euro going to kick off, right? And when you actually sort of enclose it there with the support and resistance trend line, right, it gives you a bit more shape around the opportunity. I'll tell you what is a little bit tricky at the moment, just looking at sterling, right? Even since December, I mean, we had that rally, all the UK numbers were strong, and now it's just drifting sideways. So sterling, another one, waiting to get that key direction. We're waiting to get this, like, we're waiting to find out the answer here. What's going on with the dollar once and for all, right? Those numbers in January turned around the whole negative dollar sentiment and pushed back some of their interest rate cuts. The recent numbers are balancing that back out. So weaker numbers this week, in particular non-farm payrolls, should give us the catalyst for the start of the dollar fall, right? That's what I'm looking forward to. That's where I think the easiest trades will be. We'll have, trading opportunities here on, if we get weak dollar, right? It's obviously dollar Swiss will come down. Dollar yen, well, it's doing its own thing. Dollar CAD's in a tricky one this week. We could have dollar weakness. We could have like a dovish CAD, and that won't go anywhere. But you want to keep an eye on oil. Oil is obviously rallying down, supports a lower dollar CAD. And then you've got euro both sides, but really primed. I think the market's been short euro, sterling, Aussie, Kiwi. We could see those, all those instruments will all become tradable if we get the weaker dollar picture, right? Now, just to make sure you factor this in, if our worst case scenario is the non-farm payrolls are strong and we get some sort of bullish comments from Powell, because it just takes out all the new fresh negative or downward bias in the US dollar, and we're left there sitting waiting for that to come into play. And that's what happens when you come through an interest rate hiking cycle. All the numbers start to fall. It gets to a stage where it's just teetering. We're waiting for the penny to drop to sell dollars for when they sort of start cutting rates. We're at that point, but we just haven't got the critical data to come out weak yet. So that's something that we need to be. You just got to be patient to wait for it, right? Just starting the week, as I said, equities on the back of those weaker US numbers, we should see US equities rally, right? We see Euro Sterling Aussie Kiwi rally. Well, Euro Sterling Aussie are at the moment, but you know what? This is the start of the week, right? Liquidity is a little bit scarce at the start of the Asian session. So don't read too much into it at the moment. As we come into the European session, we can have a closer look, but you really want to be focusing very closely on the numbers and plan out your week, right? So the start of the week, not a hell of a lot coming out. Keep an eye on a few of these numbers like Swiss inflation, etc., ISM services number, but the week really kicks off on Wednesday, right? Get some Aussie GDP, Eurozone retail sales, Bank of Canada, get Powell, and then that rolls into Thursday, Friday. So there's no rush at the start of the week. It's going to get busy, and hopefully I can really keep you on track with the daily trading action as we go forward. All right, guys, have a good week. All the best. Cheerio.